If you are not marking these levels of liquidity as a day trader, you are missing out. So I'm going to give you these 5 liquidity levels that you should be marking on your charts daily. The first set is the 15-minute opening range breakout. I have the indicator for this already, so I'm just going to turn it on. As you can see, the green level marks the 15-minute high and the red marks the 15-minute low. You need to let the first 15 minutes of the trading session pass before marking these levels. And for your next set of liquidity levels that you should be drawing is the pre-market high as well as the pre-market low. Price cannot make a big move until one of these levels are broken to the upside or the downside. And lastly, you want to make sure you're marking the opening print of that day. That is the very first price that is printed during every session. So I marked that. I'm going to go ahead and change the color so that it sticks out. But the very first print of the day, you should be marking that level. So as you can see, we now have all these levels that we can play off of during the trading session. We see it broke the pre-market low, and you always want to wait for the retest, and it did reclaim that level, so that would not be a good entry for puts. It kind of came back down and tested it, formed a double bottom. When it reclaimed it again, that would have been a good entry, but you had to be mindful of the opening price that we had coming up, which would be the more ideal entry because you have a lot of volume there. It did break through that, and it broke through the 15-minute ORB strong, and it came back down and retested it. So that was a good entry right there on the retest, and you could have took SPY up a couple dollars. Make sure you save this video so that you know what levels to mark during your liquidity. And if you found this to be helpful, hit the like button and be sure to follow.